Hey guys, this is the Real Estate Podcast and it's your host, Alex Kaufman. Now, before we dive into today's episode, I need you to do me a solid. Hit that subscribe button on your phone if you haven't done so already, and share this episode with just one person. It's going to help us get this information out to more people to learn about entrepreneurship and real estate. Thanks. Now let's dive into today's episode.
To be an entrepreneur, I think the couple of principles I can think of outside of knowledge is be bold and flexible. Entrepreneurship is not for everyone. If you're great at building, being an engineer at a software company, but be great at it. But entrepreneurship, I wanted to, as you know, Matt, has lots of ups and downs, and then we should be bold and flexible to make that.
This is the Real Estate Podcast. Somehow we got that name. Shravan, thank you for coming on. The CEO and founder of American Ventures. You guys are here in Austin, Texas. You wrote a book, and we're blessed and excited for you to come on. I know you're a busy guy, so thanks for coming, man. Appreciate you.
Thank you, Matt. Thanks for having me.
Absolutely. If it's cool with you, what we'd like to do is kind of dive into your background as much as you want to go as to what you've done and where you are now. And then I'll just kind of pepper you with some questions and just try to add value to listeners and go from there.
Yeah, that sounds great. So I'll give you a quick overview of what American Ventures does, but how we got here over the last few years. So I have a scientific educational background. So I grew up in India, then moved to New York City for my grad school, and then my dad was a physician. And then how I was able to turn from a pharmaceutical scientist into a commercial real estate investor, I think the seeds were planted way back when I was a kid, because my dad, while he was practicing physician, he was very busy, but with all the savings he had, he gave us a good education. At the same time, he started investing in land across different parts of a city called Hyderabad. So fast forward to the time when he retired, his savings were a lot low, but the wealth he created from real estate investment was immense. I think that basically started my real estate investment career. And then when we were like 7th grade or 8th grade, when he made some investments, he used to send over summer vacation, hey, you know what, why don't you go and oversee these investments? And then me and my brother used to tag team and then oversee construction of a couple of homes here and there. But since I was a son of a doctor, I was somehow in tune to more scientific education. So I went to school at St. John's University and then became a pharmaceutical scientist, worked on a drug called Clarinex at a small level. But while I was doing my lab research, I started investing with my free time into single family homes. I think that laid the foundation for the future American Ventures. And then in 2013, I realized, I wanted to make my investments into much bigger scale. I want to have economies of scale. And that's when, instead of having multiple homes in different locations, I switched the investment overview and completely went on it to why not have multiple homes in one property. That's hence came the multifamily investment for us. And then bought my first apartment complex, a 200-unit deal in San Antonio, Texas. We turned it around and sold it within a year or so for a 48% IRR.
That's
and
awesome.
Then the 2-3 friends and family members that invested ended up in rolling that money into the next deal and the next deal. So after 3 deals, I realized, I'm running out of my friends. I need more investors. So immediately we made a strategic change to our investment thesis, which is why not partner with institutional equity groups like private equity groups and family offices? Then we didn't stop. From there, we grew the platform to over 4,300 units in the next 4 or 5 years. And the other pivotal point is in 2018, we made a strategic decision to sell a lot of our assets because I was thinking 2020 has something in store for us. The real estate cycle is lasting longer. By the time late 2019, we exited over 3,500 units, made some amazing returns. 90 to 95% of our investments did really well. And then we struggled on 1 or 2. and I'm an open book. I ended up in sharing because you learn from your failures more than from your successes. So I literally outlined them as two case studies in my book.
Very
So
cool.
the good deals, bad deals. I think the knowledge is everything.
Yeah. And so when you were doing these single family homes, where were you buying these at, and how many did you buy? What did that look like?
In fact, I don't know how many I bought, at least closer to 100 homes or so. So the single family homes, mostly I bought in San Antonio Metro, as well as Austin, MSA, with majority in San Antonio, where I used to live there. But I did move to Austin back in 2011. Then I did invest in a few single family homes in Austin as well.
Okay. And did you move to Austin because of opportunity that you saw here with real estate, or what?
Yeah, that's right. After leaving New York City and with my brother living in LA, somehow I felt Austin is where I belong in terms of the amount of tech innovation that happens, the amount of diversity the city has. And then a lot of wealth has been made for me in San Antonio. Nothing against, it's a great city. Somehow it's the opportunity that brought me to Austin.
Yeah. That's Opportunity City. That's what we call it.
Yes, the big boom town.
Yeah, man. I mean, I don't know how you feel, but it just seems like we're in such a good place with the amount of jobs, and like you said, the diversity of jobs, of people. It's a cool place. I feel like everyone in Texas knows Austin's the place to be, and Texas in general is a good place for business. So it just seems like we have a pretty long runway, but as we got to be smart in what we're buying and not get over leverage and all that. And just seems like we're in a great spot looking 30, 40 years down the line.
Absolutely. I think our horizon of the vision for every property I invest now is we have the flexibility, but we look at it at a 10-year cycle. And if obviously, we have an opportunity to exit anytime, but that long-term vision is what I've seen. The generational wealth has been created in the past doing real estate.
Yeah, absolutely. So what is, you talked about some of the mistakes, like you got any lessons you can teach us all about, big things that you would have avoided, or, something that happened that you learned from?
Yeah, absolutely. I'm more than happy to share a couple of deals that went bad, and then how we were able to get into action and then overcome that. And then eventually the deals performed okay compared to, just to give you a perspective, out of 23 apartment complex investments I've made, at least 20 of them had returns about 18 or 20% IRR, with the highest being a 51 IRR deal and the lowest being 9 or 10 in. So what I learned is one of my biggest investment thesis is always we look into employment drivers, economic indicators. These are like why am I buying big in Austin?
Mhm.
Is mostly because these employment drivers are very strong.
Mhm.
So this deal that did not do well was in a tertiary market. So I think so that's number one, where if the construction jobs, like I think, so maybe I'll peel the onion a little bit more to give you a much better idea.
Yeah.
So when you look into any apartment complex investment, you're looking at a rent roll where you have a profile of demographics of your tenant, where they work, what kind of jobs we have, and so all those things. So one of the things we missed during the DD was at least 20% of those units were rented by construction workers. Obviously, we don't have much more detailed information, but we ended up in hiring a management company. Usually we have a strategic partner now that does extensive DD on all these. So they failed to identify that this many tenants are working in this company. And I think where we missed out was the construction jobs were not replaced by permanent jobs, especially during the energy crisis in Houston Metro. This tertiary market happens to be outside of the Houston, even though they consider it technically MSA, but it's not really connected to the Houston medical industry or any of that. Mm-hmm. So when the construction jobs were not replaced by permanent jobs, there's a huge occupancy dip. That's one. And second thing in the occupancy dip, in terms of the second one was the high paying jobs were coming, but a combination of the Hurricane Harvey, as well as the companies not wanting to hire those positions that were open, that created a vacuum. So the entire submarket fell down to over 84% for at least over a period of 2 years. I think that's a long runway. And then the worst of the COVID definitely had an impact. Even though out of 4 or 5 properties we have during COVID time, only one struggled. Unfortunately, this happens to be one of them. So I think if we had multiple checks and balances that we do on every deal now, if a deal like that happens to us again, we're way well prepared to overcome those challenges. First, we won't get into a deal like that. And second, obviously, every investment may go in a sideway, and then we want to be better prepared. So I think those are the 5 things. 3 were under our control, 2 are completely out of control, and hence a bad investment there.
Yeah. And I was going to say, I mean, those 2 things, those are big. You know, obviously COVID and then Harvey. I mean, those are big deals that you had to figure out how to adapt with those challenges. I mean, that's never something that you plan for, especially COVID, obviously.
Yeah, that's why I recommend all the investors to diversify their portfolio into multiple markets.
Yeah.
And not put all investments into one deal, because just like a tech investment, you can't find unicorns all the time.
Yeah. Well, and I appreciate sharing that. And obviously, you've had some great deals. You said 48% return. I think one of them was 60 plus. Let's talk a little bit about your company and kind of what are you guys doing? What are the goals? Like, give us an outline of what that looks like if you can.
Yeah, that's great. So the name of the company is called American Ventures. In fact, not only that's the website, americanventures.com, but we also have the trademark for that name perpetually. So I didn't know that American Ventures can be trademarked. So I think it's good for our eventual ultimate branding. Yeah. And in terms of what the company does is we focus in multifamily and commercial real estate investments. So over the last 7 years, we invested in value-add multifamily acquisitions, along like 80 to 85% of the portfolio. Then we also invested in some land investments, some mixed-use properties, but the core always has been multifamily. Then as we started exiting these deals in 2019 or so, the market after the COVID blip rebounded, and now the fundamentals of the value-add multifamily investments are completely misaligned. Having done many great deals, I want to stick to my basics. I want to stick to my fundamentals. Then we pivoted. One of the things I always preach and practice is pivot when necessary and make good use of your time. So when I couldn't buy value-add deals for a period of 6 to 7 months, because the market is completely misaligned, and I didn't want to pay 3% caps of 3.5 or 4 or 5 caps, depending on the deals. So we are big cash and yield investors. So we pivoted and then brought on a really good partner on the development side. And outside of buying 2 big value add deals recently, our next $200 million pipeline for Q4 and Q1 and Q2 of next year, all are Class A ground up multifamily and mixed use properties.
Nice.
We recently acquired, I think I'm going to stop there, but I'm happy to give you the pipeline.
No, that's great. Yeah, keep going. I mean, you recently acquired.
Yeah, we recently just closed on an asset in downtown Garland. We're building 155 units, Class A, typical 3-story garden style apartment. And in this case,
where did you say it was?
The downtown Garland is more of a semi-urban 3-story, but all like stick frame. So it's not underground parking. It's the downtown Garland is right within the Dallas-Fort Worth MSA.
Got it.
And so here's the beauty of that investment. We projected approximately 24% IRR on that deal, which is extremely hard to find in the current market. And it's a 3-year investment period. And then here's the beauty of that investment. We have secured a 3% HUD loan for 40 years fixed interest rate.
Nice.
And I think it's more of apart from a great real estate deal, financing is very key. Yeah. By securing that financing in 3 years, in my opinion, that's going to be one of my 40 IRR deals, but we are very conservative. We want to project what we feel, even if there is any kind of a downturn in the market, we want to be extremely safe. So we are projecting based on the market comps a year and a half ago, not the market comps today.
That's great. Is that the best interest rate you've ever gotten on a large deal like that?
Yes, absolutely. I think, but again, Matt, you need to know it takes 16 to 18 months to get a HUD loan. The invitation letter came back in April of 2020, and it's closing in December. And so we are in the final leg of the HUD closing. And yeah, so if again, once you secure that financing, it's an investment that's golden.
Yeah. That's real estate for you, right? It takes a long time to, especially with development, to get these things set up. That is unreal, man. I mean, who knows? We'll have to look back in a couple of years, but I would imagine, just my guess, that 3 years from now, rates are 5.25, 6.25. Who knows? So you're locked in. That's great. And 40 years.
I think it's a great exit strategy too, apart from being a very fundamentally good decision to get that loan. But in exit, it will pay more dividends.
Yeah. So are you guys constantly looking for new talent to come join the team, or ways that other people can help out? What does that look like?
That's correct. I think it's all about team. Personally, I can do so much. So we always look for great team members. And I think if you have read the book by Steve Schwartzman, What It Takes, that changed complete perspective on team for me, how the entire Blackstone was founded back in late 80s to what it is today. It's all about the team. So currently we are closing, we have a decent pipeline. So by virtue of that, we're looking for more talent to join our team. One of them is going to be an analyst role with 5 years of experience. We're looking for somebody who is a financial wizard at the same time, amazing in terms of not only crunching the numbers, but also be bold and flexible, and then ability to find deals for us. So that's kind of an analyst position. And then we have 3 ground-up development deals in the works. One of them is the one I mentioned. Then we also have a land under contract in Austin's iconic South Congress Avenue. And we're going to be building 161 condos there. It's in the pre-entitlement phase. So there's a pre-dev work that we're going to be starting on the day we close. That's on January 10th. In fact, a lot of work is being done now while the deal is under contract, but we are closing on January 10th to accommodate sellers' request to close. So we're going to do 161 condos there. So for that deal, we'll be also looking for a really good project manager. As our asset manager and project managers, the workload expands, we try to plan 1 to 2 quarters in advance. So we're looking for 2 positions right now.
I love it, man. Yeah, that's really good. That South Congress is going to be amazing. Is this the first time you've done condos?
Have done, in fact, my business partner on that development has done condos in over 150 million or so, including the St. Elmo deal that's right across the street from this. So personally have invested in condos and also, but haven't done a condo development myself. I think that's exactly where the team comes into play.
What's the general thought process on deciding between condos and apartments? Is it that condos, do they bring more money in and how do you decide?
Yeah, no, that's a great question. So we are, like, example, if you're familiar with the South Congress location, it's exactly 9 minutes from where I'm sitting right now.
Nice.
In downtown Austin. And then the demand for condos is extremely high in that market. There are a couple of apartments already broke ground. And then by the time we launch our deal and then completely built it, it's going to be, the CO will be in our hands by 4 years from now. But it could be done sooner, but at least that's our projections. At that point, the condo market with the supply and demand in Austin, where housing has become extremely tough to find unless you move out into outer areas of Austin. So the location. And the second thing is, obviously, as developers, we are very driven on how much promote can we make. We want to make sure our investors get amazing returns, but at the same time, we also earn great return on our investment as well as a good promote. And I think on this, after reviewing various aspects, we decided to go on the condo rather than apartment complex on that particular deal.
So mostly kind of based on what's the existing supply in the market. Is that a fair statement?
That's one, and
Mhm.
also the necessity for having single family homes or condos in that market is the need is pretty high. And the third and most important thing is if you're looking at downtown market today, this is 3 to 4 minutes from, let's say, Austonian, or maybe 5 minutes from Austonian, which is one of the high-rise buildings on the same street into the downtown. So those condos, if they're selling in the $900 per square foot, ours, even if you're targeting today, the value of it is $525 per square foot. So I think we decided, I think based on a combination of all these things, condo would be a great investment.
That's great. That's cool to hear. I got a condo at the Tyndall. So
that's awesome.
you're helping push up the comps for me.
Yes. In fact, that's a great location.
Yeah. I bought it. It was actually a place that I was living in. And I always thought, like, essentially it's right there on 6th and 35.
Yep.
And it's like, it's hard to have better location than this. And I always thought this could be $1 million condo one day.
Yep. I'm sure it's going to go there. And I think that's a great return in the real estate standards. And if you earn high teens IRR, it's a great return. But those will topple all those things, those kind of investments.
Yeah. I mean, I've always seen syndications that come out and they kind of project like 12 to 15, maybe 18. And you're hitting some of these in 40s and 60s, maybe. I mean, that's pretty cool.
Yeah.
And back to what I said, I mean, we're so lucky to be here in Austin where this growth just keeps helping out a lot. You know, for me, I was buying a lot of single family homes and it just keeps booming. And we try to be smart as you can and not get over leveraged. And yours is a little different on development, but on single family, you know, we establish what it's worth and we're trying to buy it 30, 40, 50% below then to make money on the buy. And then for us, it's like most of these deals are not making you rich on the cash flow. So you gotta buy it right and then you know, make sure you can sustain it and then hold on to it for a long time.
Absolutely. Very familiar.
Yeah, you get it. Do you believe in owning your primary residence, or do you say, hey, don't do that, it's a liability? What's your take on that?
No, I think again, like neither I'm opposed to anyone who doesn't want to own a primary residence, but at the same time, I do believe, in fact, I believe, my personal belief is the primary and secondary and tertiary residences you have in different places. I don't want to even have debt on them. I think it's even though it's not a great investment, I think one thing I learned over the years, I remove my investment principles on the personal home.
Okay.
And also, so like example, no leverage, no debt on the personal home. It's not a great investment idea, but personally, that's one of the things I feel is why not just pay it off and then own the residence. And I think maybe 5 years ago, my mindset was different. Now I'm more interested in the long-term horizon, legacy, and building a massive company. So I never compromise on the personal residences. And even if it defeats any investment principles, I wouldn't mind. But I'm in favor of owning a primary, secondary, and tertiary residence too.
Nice. I love it. That's very cool. Right on, man. Well, before we get out of here, what would you say, like one or two things of advice for people that may be just getting started in real estate or entrepreneurial focus? Like, what are some things that have been really valuable for you throughout your career?
Yeah, I think there are a couple of things I can think of. Knowledge is everything. I think if you don't need to be an expert before you get into an investment, but do whatever it takes, learn the knowledge, have the knowledge, and then use the systematic approach to investing. So I read books. If I don't understand, I read case studies. So that's one. And the second, to be an entrepreneur, I think there are a couple of principles I can think of outside of knowledge is be bold and flexible. Entrepreneurship is not for everyone. If you're great at building, being an engineer at a software company, but be great at it. But entrepreneurship, I wanted to, as you know, Matt, has lots of ups and downs, and then we should be bold and flexible to make that. And I think the other thing I was thinking of is pivot when needed and make good use of your time, because the investments you made 5 years ago may not be suitable today, but that gave you the knowledge and the skill set. Pivot as needed, just like how we did lots of value add multifamily deals, but now we have a $200 million worth of deals in the ground up development. Again, having the right team members, having a disciplined approach to investment and risk mitigation, preservation of capital, and then return on investment, all these things. And then take care of your investors no matter what.
Yes. All right, cool. And what's the best way for people to understand and find case studies? Like, where do you go to read case studies?
Pick my book, it's called The Science of the Deal. I listed a few case studies. I also can recommend What It Takes, which is by Steve Schwartzman. And I can recommend one of my friends' book, Wealth Can't Wait. That's, I think, majority of the entrepreneurs, when they listed their investments or the investment thesis, that's your case study.
Yeah.
So cool. I think books I feel is what I meant.
I love it. Well, Shravan, I really appreciate it, man. What are ways that people can get a hold of you and touch base if they want to potentially invest in some deals, or kind of get to see a little bit more about what you guys are doing?
Yeah, that's great. I think AmericanVentures.com is our website. Either just sending an email from the website, or if you need to reach out directly, my first name and email, which is my first name at AmericanVentures.com, which is SHRAVAN at AmericanVentures.com.
I love it, man. Anything else you want to touch on before we get out of here?
No. I think this is great. I think you covered the bases really well, and then thank you for doing this.
Yeah, man, we love it. We have fun with it, and just try to get content out there for people. Hopefully, someone listening heard what you're looking for. You need a financial wizard, you need a project manager, and maybe someone will reach out from this. So hopefully that can add value.
Great. That sounds good. Man.
Well, thank you so much. And I can't wait to see what happens in South Congress in a couple of years, and we'll keep pushing forward. So appreciate everyone for listening. This is the Real Estate Podcast, and we are signing out.